All right, so welcome to another video. Today, what we're going to do is we're going to go ahead and check out Coin. It's coming into 150. So the question is, do we buy it? I'm going to give you a quick stock analysis. But before we do, just remember to check out the Traders Fly website there for any insight on some upcoming classes that we have. We have market seasons coming up April 25th, nighttime on Zoom. This is all regarding option trading. So if you're into trading options, check out the Traders Fly channel. There's a lot of other live classes here that we have. And definitely check out the Discord channel if you're kind of want to see some of the charts that I post periodically from time to time. So I'll post them with, support, resistance, and some technical levels that you may want to watch. Okay, that link will be in the description below. Let's get started. I want to check out some coin here. This stock's been struggling a little bit recently, but here's kind of what we've got going on here. So the stock had an IPO here around April, May, just the previous year, pulled back a bit, kind of chopped around, tried to pop a little higher, pull, and just nonstop pulling back. So if you really just look at just the monthly charts, we're just constantly down, 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 down. A lot of it is just down. We've only had 1, 2, 3, 4 green bars, and that's been a little bit of a struggle. So overall, the sentiment has been kind of negative on the stock. But the question is right now, are we kind of basing, and it's not to say that you can't make money or to trade it to the upside and be profitable, even on a downtrending stock, as long as you're getting it on pops like here on a nice move, or even a pop here. If you're getting it at the right pops, it's still possible to just be fine and okay with the trades. So the question is right now, are we coming into a possible support level? So here's the thing with coin is the 150 is kind of a nice support level because we had a swing point here that changed. Also, what I want you to pay attention to is just this overall moving average that's been kind of going down. And now we're trying to go a little more sideways. So this is the 21-day or 21 exponential moving average, which is kind of 20 trading days in a month. That's why a lot of people use the 20. So it's been pulling back, and now it's kind of starting to base sideways. So if you look at a lot of the pricing, we've been going down, and now we're starting to go sideways. So it's starting to create a little bit of a base. The little bit of an issue with this is sometimes these bases that create right here, so we go down, we create a base, sometimes there can be follow through to the downside, and that's where the problem could lie. So you need to be a little bit more mindful. As for coin goes, there's some news here. The stock's falling. Crypto exchange in India launch isn't going well, so it continues to dip for there's a lot of different reasons here. Pushing that stock lower, but overall, it hasn't been as embraced as maybe some of the other investment types. I mean, yeah, there's some of the more innovative investing does take this into account, and it's like, hey, it's a nice investment. But on the other hand, you need a lot of money to continue to fuel to push a stock higher, and you want to keep pushing it higher prices. You definitely need more capital to always be coming into it. So if for a stock they just keep heading higher, there's this constant injection of capital that has to happen, and we haven't seen that. So there's these bursts, like news comes out, there's a burst that comes in, and that kind of thing. But these stocks, I would say, are more of like nibbling opportunities where you nibble on them, you let them sit, and maybe in the next year you might get a nice explosion to the upside, similar to what we did kind of here. You're kind of nibbling at different spots, maybe at different points, and then you get a big move up, and then you kind of dump and liquidate things. That's kind of the way that I would play it. So if we're looking at 150, this is the last time we got a nice big pop. 150 is another move to the higher upside. So here we're looking at that technical support level as well. We're coming right into that. So if you're kind of interested in, hey, I think it's coming into a buy the dip opportunity, yeah, this could be a possible area. But if we break 150, that's definitely where you want to set your stop, is a little bit lower there. Some of the other benefits here that I like is that the volume on the selling pressure hasn't been extreme. So we do have some selling action right there. But it hasn't been like anything like major or like really upsetting, like where some people are just like totally, the stock is just toast and there's just a huge problem. In this one, you haven't really seen a lot of that. You just seen some general selling come into play. So that's one of the good things about it. And that's why I think 150 could be a possible level of support. But what you want to do is probably see if you start getting this turnaround, similar to what you saw over here. So even if you get in like 1 or 2 days later, you didn't miss the move, because what people do is they get in it like on a big down day, which could be good from a probability standpoint, because then you might get a big reversal. But what could happen is this thing could continue to move lower. So for example, you get in it on the day right there, and then you go down over here, and that could be a little bit more fearful. So you could always wait a day or two, because if you're looking for a longer term move up, maybe let's say into the 220, 1 or 2 days, even a 3-day move like this isn't going to kill you. So wait for a more clear confirmation if it's a little bit more of a risky investment for you. If it's makes you feel a little uneasy, then you definitely want to step aside. But 150 right here was the last time where we got a little bit of a bounce. The stock is fairly new, so it's tough to gauge any other support and technicals off of that. But this is the last time where we got a pop. I would watch, if we do pop, watch the resistance right here at these levels. That's could be a little bit of a problem zone. It's really more around the $200 range. But from a technical perspective, you're looking at about 210. Because you also have the gap right over there in that area, and some of the resistance and turnaround zones in the stock. So anyway, that's what I'm watching here in this ticker. You had this downward trend, tried to pop, was trying to hold here and break out, but it still hasn't done it. Not enough time to digest a move. So you need like a little bit of this rounding base to build some energy and momentum for that stock to go back into those higher prices. So be mindful, be careful. Still a little bit risky because overall this is a new stock. That's number one. Number two, we've got a lot of just downward pressure in this stock. Anytime it pops, this thing sells off. So it's just always negative sentiment. And if you look at it from a monthly perspective, these candles just continue to be red, most of them. So you are kind of trading against the grain, but that's where nibbling a little bit here and then being strategic about your positioning could be a little bit of a smarter approach here, rather than going too big, too heavy all at once. Anyways, that's just my thoughts and takes. And, just watch out. There's also, you've got earnings here coming up very soon. You want to be a little bit more careful here. You're getting right into earnings season, so this could be a little bit more of an issue as well to kind of navigate those waters. All right, thanks for joining me. Enjoy the rest of the week ahead, and I will see you on the next episode.